day, my good people. We're back again for another great show today. We got a great show. We got a great guest that's going to be telling us some great things about credit and all the things that we probably don't know about credit. You know, there's many misconceptions about credit and how it's used and the different laws that are in place to protect us that many of us don't know about. My guest today is Mr. Timothy Sanders. Mr. Timothy Sanders is a credit education expert and credit repair specialist who has been in the industry for over 7 years. Tim is a native Floridian and a graduate of the University of Central Florida, which already tells you he's smarter than me. Tim is a native, Tim is a native Floridian and graduated from University of Central Florida after suffering from several financial hardships during the 2008 financial crisis. Tim was able to repair his credit and get back on his feet. And he's motivated by a desire to help families and friends experiencing the same struggles. And Tim founded Credit Repair of Florida, a credit service aids organization located in Central Florida that educates and helps individuals with damaged credit improve their credit and leverage it to reach their financial goals, which is one of the things I talk about over and over and over again. And we're hosting an event this coming Thursday. So stay tuned and check that out. So again, thank you all for joining me. And without further ado, I'm going to bring up Mr. Timothy Sanders. Mr. Sanders, how are you doing today, sir?
I'm doing fantastic. Fantastic, sir. Thank you. Thanks for having me. I appreciate it.
Tim, I'm excited, man. You know, credit is one of the things that I talk about quite often with my real estate investing students. And I show them how to get their credit in order to be able to get funding in order so they can get deals done. So what we're going to talk about today, again, like I said, I'm excited to have the conversation. I don't know how it happened. I just happened to have on my FICO into a Fortune t-shirt today.
I see what you did there.
Yeah, I promise it wasn't intentional, though, but I'm glad I happen to have it on.
Hey, man, that's the universe.
Definitely.
You know what I mean?
So, Tim, tell a little bit. Is it okay? I call you Tim, right?
Oh, absolutely. Absolutely.
Okay.
I would prefer that.
Okay, I want to cut your name in half. You know, some people do that. Some people don't like it.
Hey,
So go ahead and tell the folks a little bit about yourself. And I gave a little bit of your background, but I know you can tell your story a lot better than I can. And we'll get right into it right after that.
Yeah, absolutely. I mean, that was a good intro and accurate. You know, I started my business out of personal hardship about 8 years ago. Coming through the financial crisis, I made some real estate, investments that kind of fell through. I ended up with a bankruptcy and ended up having to walk away from a house, and my credit was severely damaged. So I had to figure out how to dig my way out of it. Got with an attorney friend of mine, and then we were able to get some things done on, corrected on my credit. And once we did that, I got very curious on how the credit system worked. And then I started just kind of doing my research and going down that rabbit hole and really kind of figuring out how the credit system is kind of stacked against the consumer. And then once I realized that, then I basically started learning some strategies and some tactics from credit experts, started going to credit conventions and boot camps and reaching out to a lot of people that are affiliated with the regulatory agencies and the credit bureaus, and learning some things. And then once I was able to kind of learn a lot of things, I started helping out some family and some friends with some of the things that I learned. I was able to not only successfully clean up my own credit, but to help out some friends and family. And then I was like, well, you know what? I might be able to get a broader reach and help a lot of people. Let me see what would happen if I, started this business. And then I said, hey, if I can get one random client, then I know that I can help a lot of people. So I put a coupon ad out in one of the convenience stores, and a couple of weeks later, my phone rang, and this Gentleman contacted me, needed some help with his credit. So I met him, took my laptop, met him at a Starbucks after work one day, signed him up, and a couple of thousand clients later, the rest is history. So this is what I've been doing on a full-time basis for the past 7 years. I've been able to help a lot of people. I get a lot of kind of satisfaction from that. That's the part that I didn't factor in, is that the impact that I would be able to help people out of situations that they felt were hopeless. But and I really I try to stay on top of on what's going on in the credit industry, the new laws and regulations and things like that. So here I am.
Great stuff. Great stuff. One question I want to ask, man. Ironically, I was having a conversation with a client earlier this morning, and the interesting thing that I find is that so many people have learned about credit. Not as many people pay attention to it as they should. But what do you
Mhm.
say about those folks that say, why should I? I'm probably too early to ask this question, but I want to get right into it. Why should I have someone else do my credit when I can do it myself? What would you say to the people who have the idea of doing it on their own?
Well, what I always say is, I can flip my own hamburger too, but you know, but then there's McDonald's across the street who's a lot more efficient at it and can probably do it better a lot quicker.
Absolutely.
So, the thing about, but I mean, it is, there's a legitimate concern. I think credit repair has a bit of a negative stigma because a lot of people feel like they can get into this business and when look at it as fast money or whatever the case may be, or there's not a lot of restrictions getting into the business. But it's like anything else. I mean, yeah, you have a right to do it. However, you really have to understand what you're up against. It's not as simple as just sending in a couple of boilerplate um, you know dispute letters that you get off the internet and
Mhm.
fixing your credit. You really have to understand the laws and the regulations and your rights as a consumer and leverage those to do it. And even when you do know what you're doing, there's no guarantee that the creditors or the credit bureaus are going to abide by those laws. So you have to know how to escalate it in order to put them in a position to where it's in their best interest to go ahead and remove that stuff off your credit report. So yeah, you can do it, but it takes a lot of time, patience, and expertise a lot of times to get the results that you need.
Absolutely. Absolutely. And you mentioned there are other regulatory agencies. One of the things that I believe a lot of people aren't familiar with, as it relates to those regulatory agencies that actually manage or monitor the credit bureau, right?
Right,
And I'm sure, this is something that I'm sure you teach as well. Like some people think the credit bureau is the top dog as it relates to credit
right,
repair. Uh,
absolutely. So
so
and
I'm
and
sorry, go ahead.
and, and yeah, and that's by design, right? Because they call
Yeah,
themselves bureaus, and when you think
exactly.
bureau, well, it must be some kind of government, highfalutin agency that has the last say. But
Mhm.
no, the credit bureaus are just basic. They're just private companies that are in the business of collecting and selling data. No more, no less than that. And they are, they have to operate within the guidelines of certain regulatory agencies, specifically the Federal Trade Commission, and the Consumer Financial Protection Bureaus, and then there's state agencies and governments that also have a say in how they treat the consumers. So, and then within that, there's certain laws, statutes, and regulations that um, specifically regulate the credit bureau's behaviors. So yeah, so they're not the end all be all. There's regulatory agencies and things that they have to answer to, but they have the support. And I'll get into my conspiracy theory, right? Because the thing, when you think about it, when you think about it, flawed credit is a lot more profitable than perfect credit.
Mm.
So, that being said, the credit bureaus are going to usually err on the side of their customers, which
Yes.
are the creditors in which subscribe to them and pay them. So,
Mm.
so that's what the consumer is basically up against when you're dealing with the credit bureaus.
So in following in that conspiracy theory, are you saying, Timothy, Tim, do you mean to tell me that it's more profitable for these companies to be sure that you have bad credit?
Well, that's that
It's a heavy question to ask.
yeah, at the risk of Big Brother watching, but that
Exactly right.
yeah, you know what? I think there's a sweet spot, right?
Mm,
There's a sweet spot that the creditors or the banks can have a low risk consumer, but be able to apply high, have them to fall in a higher risk category. You know what I'm saying?
so that
So,
rabbit hole gets deeper there, brother Tim.
right, you know what I mean? So, and again, but then the hand that feeds the credit bureaus are the creditors and the banking in the lending institutions. So if I'm a lender, if I can have a low risk client and charge them a high risk interest rate,
Mm,
then I'm gonna expect the credit bureaus to kind of be on my side when it comes to that. You know
right,
what I mean?
right, right.
So there's where the gray areas come in at.
You can tell that you're really good at this stuff, man, because you skated that real good.
Yeah. Well, I got a little bit of legal background, so I know how to, I know how to walk the line without kind of
Absolutely.
so, but
Good
man,
stuff. Good
I'm really
stuff.
passionate about this stuff, and I really, I really like helping people, and really, it's really a matter of education. So when I'm working with clients, the first thing that I do is try and educate them on, and help them to understand, how the process works, and also to kind of just work as an advocate on their behalf in dealing with those. And that's why, yeah, you have a right to work on your credit, but if you find a good credit professional, then it's gonna be worth its weight in basically whatever it is that you're trying to accomplish.
Definitely, definitely. So,
Mhm.
so with that in mind, and understanding that there are several layers above what people are, I'll say, aware of. What are some of the common mistakes would you say that people make in their credit repair journey?
You know what? Um, Number one, and I was a part of your, got one of your emails this morning that really that made perfect sense. But
Mm-hmm.
a lot of people, first thing they want to do is run out and pay off collection accounts and
Mm-hmm.
expecting that paying off these collections with their, is going to boost their credit score. But that's not necessarily the case, because when you're paying off collection accounts, you could be doing more damage than good to your credit, right? Because when you pay off a collection account, it does not remove that item from your credit report. It just basically changes the balance, from whatever the debt is to a zero balance, but the actual account, the derogatory account, is still factoring into your credit score and therefore hurting your credit. But not only that, the 7 year statute of limitation when you pay off a collection account is reset. So, for instance, if you have a collection account that was 6 years old, you go and pay it off, thinking that not only is it not going to help your credit score, now it's going to stay on your credit report another 7 years because you just reset the statute of limitations on it.
Uh,
So that could be a big mistake in running and paying those collections off and I and that's something that I specialize in, and it could possibly have been gotten that taken off, the debt cleared without you even having to pay anything, because typically when an account is removed or deleted from a credit report, there's a reason why it's being deleted. So, usually when those things we challenge, they come off, then that debt is usually gone, and you don't have to worry about it anymore. Plus, once it's once it's extracted from your credit report like it was never there, then you get those points back on that from that particular account. So
Got it.
yeah, that's probably one of the main errors that people make when you're dealing with trying to work on your credit.
Mm. So you're saying they shouldn't get their income tax check and go and pay off all these collections that have been
Right.
accumulated over this time, as opposed to investing in someone like yourself to help them get those things cleaned up. Um,
Absolutely. No, absolutely.
yeah, yeah. So, and in that, what are with understanding that people are in many ways miseducated or misinformed about the process, what are some steps that they should take to improving their credit?
Well, and that's the thing about it too. I mean, when it comes to credit repairs, it's more than just getting stuff off the credit report.
Mm,
You have to understand. You really have to understand how to sort of manipulate your credit profile to maximize on your credit score. So the
mm,
first thing that you want to do is you want to make sure that you have adequate revolving credit accounts, and that's probably that's one of the secret sauce really, is having adequate revolving credit accounts with low balances. And when I say
what is that?
revolving,
I'm sorry. Go ahead. I'm sorry. Go ahead. You're going to explain.
yeah,
I'm sorry.
when I say revolving accounts, I'm referring to like credit card accounts, revolving lines of credit, and maybe like retail store accounts. These are accounts that when you pay them down, then your limits go back up. Because what happens is that revolving accounts, what they say to your algorithm is that this is because those accounts have to be managed. You have to make sure that you're paying them on time. You got to make sure that you keep the balances low, so it factors more into your credit score. So it tells the system that we have a responsible consumer who has the discipline to manage those accounts. So when those accounts are managed, then you tend to have a higher credit score. So you really want to make sure that you have adequate revolving accounts. You want to maybe go to your bank or get some credit cards. Um, you want to have some diversity into your credit profile. You want to make sure you have maybe 3 or 4 revolving accounts, 3 or 4 credit cards, auto loan, throw in a mortgage. That usually completes the profile, and that's where when you see folks that are breaking through on the high 700s, 800 credit scores, typically they have a diverse credit profile with an adequate amount of revolving credit, and then low balances on those credit accounts. So you want to try to get to that point. And then, of course, the main thing is you don't want to miss any payments. So at all costs, you want to avoid any type of late payments and things of that nature. And then I guess the other thing, there's some other sort of like tricks to the trade. A lot of people talk about authorized user accounts. I really, for me, I really try to steer my clients away from authorized user accounts,
Mm,
because they don't have as big as impact as primary accounts. I really don't think that they're, and they also send off red flags too. Um, what do you call them? Underwriting. But I mean, I digress when it comes to that. But yeah, just mainly a solid, diverse credit profile with adequate revolving credit accounts with low balances. That's how you want to try to do that. And once you do that, you'll start seeing your credit score growing exponentially faster.
Great, great, great. So you said the word profile as it relates to the credit, and I'm sure that's something that many people aren't specifically familiar with. Like many people think their credit is just made up of this score,
Right,
and they're not clear on how that score is accumulated. They know if I have this, I have that, or if I don't have this or I don't have that, that's where that score comes from, which in a nutshell it is. But can you get
right.
a little more in depth of how the profile and what that looks like, what a profile is and what that looks like?
So yeah, so when we talk about the credit profile, really, when, specifically about the things that are reporting on your credit report. So um, what reports on your credit report is going to be, again, like credit cards, auto loans, mortgages, basically any type of financial products that you get from banks or lenders or things of that. Rent typically is not reported to the credit bureaus. Utilities and things like that are not reported to the credit bureaus. So those financial accounts that are reporting to the directly to the credit bureaus are the ones that are going to hit your credit report and have an impact to your credit score. So, and the other thing too is that when you are signing up for those credit products, when you're applying for those, you want to make sure that those credit accounts are reporting to all three bureaus, because
Mm,
there's some accounts out there that may not be reporting to all three bureaus, and if they're not, or at least reporting to at least two of them, then it's really, they're really, no, there's no point in getting those. So all credit accounts are not equal, and you want to make sure that you're signing up for accounts that are going to be reporting to all three of the credit bureaus, so that you could be, because all of them have equal importance. So you want to make sure everything's reporting there. So,
mm,
and but that, yeah, so that's the thing. Really, just those items that are reporting to your credit report, establishing the payment history on those accounts, and just making sure that your track record on those accounts are on time and are clean, and not going to hurt you.
mm. Okay, okay. So is it possible, would you say it's possible for someone who has um, just credit cards, no car payment or no mortgage on their credit, is it possible for them to get a high credit score, or no? Is it, is it because they're missing those things they may not get a higher credit score, or what would you say about that?
Well, I mean, it's possible that they could have a high credit score, but all things equal, their credit score is not going to be as high as someone who has a more diverse credit profile. So when you throw in, your auto loans and your mortgages, and your personal loans and things like that, versus someone that strictly has, just basically credit card accounts, then typically the person, all everything equal, no late payments, nothing like that, low balances. The person with a more diverse account is going to have a higher credit score than
Mm,
someone who has, just specific types of credit accounts reported.
okay.
So and that's because of the algorithm, maybe either the FICO or the Vantage Score algorithm, how it calculates your credit score is going to give a higher, uh, you know, total to those with a diversified profile.
Mm, okay. So for someone with, maybe not so much credit, and they're because they don't have the profile that you're describing, and they're
Mhm.
not able to qualify for the house or the car, or maybe even a specific credit card, what would be some steps that they would take to improve the possibility of them getting approved for those things at a later time?
Yeah, well, specifically, if we're talking about somebody that's looking to purchase a home, I would highly recommend um, adding one of those rent reporting services, right?
Mm, okay.
Like, I don't know if I can drop any names on you know
As long as if you're an affiliate of them, that's fine.
Yeah, okay. Yes. Rental Karma is one that I highly recommend.
Okay.
And what happens is that they report to the three bureaus and especially if you're trying to purchase a home, because
Mm,
the FICO algorithm for a FICO mortgage is going to weight it more your rental payment history versus someone who just basically has who doesn't have it, who just has credit cards, and not only that, it'll look favorable to a mortgage company's underwriting when they can go in there and see that you've made you have a history of on-time rent payments, which should carry over into maintaining a mortgage. So I would definitely highly recommend adding that. And then the other thing too is working with a banker, because the thing about it is, like I said, all credit accounts are not equal, right? Because if I pull a credit card off of Credit Karma, it's not going to have as much weight as if I was banking at a one of the major banks and added one of their credit cards to it.
okay.
So yeah, you want to try and work with a bank and get some banking credit cards if possible added to that. Rent reporting accounts will definitely help. Um, I wouldn't recommend these little credit bureau boost accounts. In my opinion, they're pretty worthless because, for one thing, they just report to one agency, and they report utility stuff, which is not going to have that big of an impact to your credit score. So
Okay.
so definitely, the rent reporting accounts, diversified. Try to diversify your credit profile as much as possible. Um, authorized user account, be very careful with those. Trade lines, be really careful with those. There's a lot of people that you hear a lot of stuff about people getting scammed with trade lines and things like that. So you have to be careful with working with that kind of stuff. So yeah. So they'll add those factors in, and then that should help you kind of get to the point that you want to be to. Now, some people have to start out with secured credit cards, which is fine.
Hmm. Hmm.
You know, typically, if you can't get a non-secured card, you get a secured card. You keep the balances low on that. Make your payments on time. Usually, after a matter of time, those secured cards, a lot of companies will then turn those into a non-secured cards and offer you a higher limits. So that's one of the things that I did when I was having to build up my credit. I started with a secured card, made on-time payments. After about 6 months of the on-time payments and low balances, that card was then converted into a non-secured with an increased limit, and it gave me a nice little boost on my credit score. So seek those types of accounts out. And relationships. If you're trying to trying to purchase a home, work with the lending institution or a mortgage company. You really want to ask them, hey, what does my credit profile need to look like in order for me to get approved, with your products and things like that. So don't underestimate, the power of who you know as
Right.
well, because I mean, I can have an 850 credit score. If I, walk into a bank and they don't know me, um, there's no guarantee that they're just going to turn around and, approve me for the things that I'm trying to apply for.
Good deal. Good deal. So we have a question from my man, Mr. Pone Baldwin. Thank you for joining me. He says, this is what I saw on my credit score. He says, one had a higher score than the other two. Why is that?
Yeah, well, Mr. Baldwin, I appreciate you, chiming in and asking that question. That's a great question. I think that kind of goes back. Um, the one thing about the credit bureaus, they're all three totally independent companies,
Mhm.
and they report information based, pretty much on a subscription basis. So a lot of times you'll have creditors that may not report to all three. So if you look closely, the information that is not, it doesn't always mirror each other. So something may be reporting on one credit bureau that's not reporting on the other one. And so, a lot of times that's the reason why you see those discrepancies on your credit reports, because all of the information it's never going to be 100% equal.
Got it. Got it.
Yeah,
Okay.
and I think the other thing too is that the creditors, sometimes they do report to all three bureaus, but they may not be reporting it. They may not be updating it at the same time, or it might be updating. There might be a lag in the time that the information is being updated. So
Mm,
typically, that's something that can have an effect. So you may check your credit scores one day, and because of the fact that all the information hasn't reported to all three bureaus, and you turn around a couple of days later, you may see that it's closer to the scores, because now everything has been reported to all three of the bureaus. All three have updated.
got it. Got it. Okay. Great stuff. Great stuff. All right. So with that in mind, uh, thank you, sir. Thank you, sir. Mr. Bone said he's still tuned in with us. Thank you for hanging out with us.
Awesome.
And yeah, hang out, because I know we got some great stuff we're gonna get into with what we're gonna cover. So the question I know that many people will want to know, and I get this all the time. My credit has been messed up for 20 years. Can you fix it in 90 days? How long does it take? How long should the process take? And I know it depends, depending upon what their situation is,
Right,
but what's a realistic? I don't know if I should even ask the question that way.
right,
What's the expected? What should someone expect when they go to someone like yourself to get their
right.
credit repaired?
Yeah, well, for one thing, and like you said, I mean, the answer would be it depends, of course.
Mm,
Sound like an attorney at this point, but
I know, right?
um, you know what I mean? But yeah, you credit your credit reports is almost like it's like a fingerprint, right? Because every credit report is different. Um, a lot of it depends on what your goals are. If you coming to me and you're trying to purchase a home, it might be a different. It might we will have a different plan than if it's someone coming to me trying to purchase an auto. You know what I'm
Mhm.
saying? You come to me looking to purchase an auto, I might be able to have you, in 60 days, you may have you good to go. If you're looking to purchase a home, it could take a little longer. So it really depends. And typically with my clients, we usually we're looking at about a 4 to 5 month turnaround, and
Mhm.
that's if nothing traumatic happens while we're working on the credit. Because sometimes, I could be working on someone's credit, and they, might turn around and you have out of nowhere you get like a medical collection to hit your credit report. So now it set us back a little bit, and now it's gone a little longer. But there's no silver bullet. There's no quick fix when it comes to your credit. Now that being said, usually within 30 to 60 days, you should start seeing some results. Now, if you're working with someone and, after, 3 or 4 months and you haven't seen any type of progress, any type of results, that could be problematic.
Mhm.
Um, but you should be seeing progress to understand that, hey, we're getting somewhere, and if all goes well, we should be able to reach our goals within give or take a month or two of basically where we set out for it to be realistically. That's why, like I say, on the onboarding process, when I'm working with a client, the first thing is to educate them, and then the second thing is to set those realistic expectations as far as the amount of time it may take. And again, it depends on what the goals are, and again, how severe the damage is on the credit. I mean, if you have some couple of bankruptcies along with 10, 12 credit card collections, that's going to be a high mountain to climb versus someone coming to see me and they have 3 or 4 medical collections. Then that should be a pretty quick turnaround in that regards, as long as we add some, as long as they have the adequate credit accounts, active credit accounts on
Okay. Okay.
there.
So, and again, just I guess along those same lines, and I know you mentioned some of the things people can do to improve their credit, but
Right,
how, even as a person, even if a person hires someone like yourself to do their credit, what
right.
part do they need to play in that process? Many people think they just hire somebody and they just lay down and go to sleep and they don't have to do anything else.
Right,
um,
yeah, exactly.
and they
Here's my
say,
credit, fix it.
you didn't fix my credit.
Right, yeah, here's my credit, fix it. I'll see you in 30 days. I'll be back to my 750 in 30 days. So
Exactly.
no, but that's a great point, and you have to be, it's incumbent on the client to be engaged in the process, because what happens when you start challenging stuff on a credit report, you can expect to start receiving letters, possibly phone calls, and and attempts by the creditors to contact you. So um, in my case, I always make sure that I tell my clients, hey, when those letters come through, when those letters are coming in the mail, make sure you get those to me as soon as possible,
Mhm.
because a lot of times those letters will have some, those letters help get stuff taken off the credit report and help. It becomes a matter of case building, because a lot of times on those letters and correspondence and the behavior by the creditors, they could be incriminating themselves and putting themselves in a position to where that behavior or those errors on on the letters um, can be used, can be leveraged to get the stuff off the credit report. So violations, a lot of times violations and errors on those will be on those letters, and that could be used to leverage to get the stuff taken off the credit report. And let me mention this too, is that when you're dealing with those creditors, you want to make sure that you limit the phone conversation contact with them, because a lot of times you got to understand you're dealing with those professionals on the other side of that phone. So a lot of times those guys, they're baiting you to kind of compromise some of your rights, some of your
Mhm.
consumer rights. So you may be saying stuff that's hurting your rights as a consumer and dealing with those creditors. So you really want to make sure that you're seeing all of this stuff in writing. You're seeing this stuff, coming through the mail, and a lot of times that can be leveraged. So that type of stuff, you want to make sure that you're engaged in the process. You got documentation and things that need to be sent in. Um, you're having, and I'm constantly every 30 days, I'm reviewing my client's credit profile to see what's come off, the changes in their credit score, and then making those recommendations. It's almost like it's like a quarterback. You get to the line of scrimmage, you look at the defense, and then you might have to audible. Get out of that. Change your strategies, change
Mhm.
your tactics in order to kind of move forward and go from there. So yeah. So in that case, if you're working with a specialist, then you're constantly reviewing the credit profile, reviewing the activity, and making those changes and adjustments as it pertains to your strategy and in your credit repair strategy in reaching those goals. So it's very incumbent that they're engaged in that process and doing the things that are being recommended by the credit specialist.
Mhm. Mhm. Yeah. Many of my clients, I tell them, listen, we're a team. Like I have
Absolutely,
to, I'm working on this side. I need you to work on that side. In order
for
for us
sure.
to accomplish, what they're ultimately looking for. When they ask me how long it's take, I tell them it takes as long as you allow it to take.
There you go. Exactly. It depends. A lot of it depends on you. So
Definitely,
you
definitely.
know, yeah. Yeah, you can't just sit back with your arms folded and you gotta be in the game. You have to be in the
Yeah.
game.
Absolutely, absolutely. So when it comes to things like, I'm going to throw out some terms here that people are familiar with, but I'm sure they have no clue how it relates to how their credit is impacted. For example, collections, charge-offs, bankruptcies, these different types of things. What's the difference between a charge-off and a collection, and how does that affect the person's credit? Or
Right.
what weight does that have on the person's credit?
As far as how it's weighted on the credit score is basically the same impact to a credit score. A collection and a charge off would be the same impact on the credit score. Now, the difference between a collection and a charge off is typically when the original creditor has written that account off of their books, charged it off, gotten the tax credit or tax, for tax purposes. They've written it off their books, and it should be no longer reporting a balance on that particular account. That's when it's been charged off. Now, usually after an account is charged off, it's usually sold to a collection agency where it's then being reported as a collection. So just to be clear, collection comes first. Let's say, for instance, a credit card company puts your account in collections, and they're coming, after you for the balance on that for that collection balance. Eventually, they will write that. They may write that account, that balance off of their books, and now it's considered where it's been charged off. They're no longer reporting a balance. They're just reporting it as a charge off, and they may sell it to a collection agency. Now you see that account reporting twice as a collection with a balance and then being charged off from the original by the original creditor without a balance.
Mm.
But again, they're going to be equal in weight as it pertains to the effect on your credit score.
Got it. Got it. Okay.
Mhm.
Someone posted closed accounts. I'm not sure if that's a question or if that was something in reference to what you said. So,
Well, that's fine. I mean, I'll take a stab at it anyway. It's
oh,
it's a little ambiguous, but I'll take a stab at it. Hopefully, this is what they were asking about. So,
okay.
the thing about a closed account is just basically when you tell a creditor, if it's, say for instance, if it's a credit card and you decide to close the credit card because you don't want to use it, or you don't want to be tempted on having it to affect your credit. So you close an account for whatever reason. Um, the thing about that is that you could possibly be hurting yourself, because now that you no longer are benefiting from the activity or the reporting of that account as far as the payment history. Now
Hmm.
you still have whatever your track record was in that account. You still have that being weighted on your credit, but now you're no longer benefiting by paying by that account being reporting as active each month. So if you are in the market of trying to obtain some type of major financing, I would caution you against closing any of your positive accounts until you've secured that type of financing, just to make sure that you're benefiting from your payment activity on those particular accounts, especially if it's a seasoned account
Hmm.
that you've had for many years,
Hmm.
because you're really benefiting from that. So I would definitely, you want to keep those accounts active. Once you've secured your major financing or whatever the case may be, if you decide to close it after that point, but you've already benefited from it. But those closed account, those accounts, those seasoned accounts really help your credit report, and so you want to keep those active.
Got it. Got it. And you said something I want to make sure we give the folks a bit of an understanding of what seasoning means, and how even an older account that may be reporting negatively once removed, how that might impact them. Could you tell us a little bit more about that?
Right. Okay. So yeah, when I say a seasoned account, I just basically an account that you've had tip. So a credit report basically is going to be a snapshot of the 2 year activity
Hmm.
of your credit profile. So in when I say a seasoned account by my definition would be an account that you've had for at least 2 years. It's an account that's been active for at least 2 years because that's how far, that's how far the 24 months is the activity that's going to be reported on your credit profile. So 2 years and beyond it would be a seasoned account. And then I'm sorry, man, what was the second half of that question?
How would it? Well, you mentioned that it would impact them if that season account was removed.
Right.
And so if even if it was a negative account, would that be a similar type of impact if it was removed, being that it was
Well,
seasoned?
right. Even if if you have some derogatories on that account, um, then by removing that account, you could be helping and hurting because you lose the whatever positive account history that you have on there. But at the same time, if there's some derogatory, then you're no longer being hurt by the derogatory information on that account. So I guess it would be, it would be based on the severity of the derogatory information on that account versus the positive payment history that you've established on the account on how it would affect or impact a credit score.
Got it.
So in some situations, it could be a wash,
Right.
but
Right.
yeah, so it's the positive and negative on it.
So just, I mean, and I want to make sure we delve a little, just as deep as we can into that, because
Yeah, no
some
problem.
people have an idea that if they remove something, it goes to a 700 automatically, right?
Right.
A
Oh,
bit a
yeah.
little facetious here, but as you explained it, just for clarification for the folks that may have missed it, as you explained it, that
Right.
though, because and just I do what you do. So some people care say, well, my credit score went down. You removed that account from my credit.
Right.
Um, can you, and I'm sure you can explain to a person why would your credit score go down from removing a negative item that was on there for 10
Right.
years?
Right. Well, so a collection is a collection, right? So
Right.
you have a collection account. There's no positive impact at all coming from a collection. Once it's deemed a collection account, then it's hurting your credit score. If
Mhm.
it's an account that has maybe some late payment on it, but then it has some on-time payment history on it as well,
Mhm.
then that's where it gets a little gray area. That's where, removing that account could possibly, you could have a drop in your credit score when you remove that account because you're still benefiting from the positive history that you have established in that account. But at the same time, you are, it's hurting you because of some of the negative history that's being reported on that account. So that's where you see by removing accounts such as that, you could possibly see a dip in your credit score, or by removing that account, you might not see much of a change in your credit score at all when you're expecting, you know, a jump in your credit score by removing those particular accounts, but showing a couple of late payments. So that's where it becomes kind of dicey, depending on how long you had that account, and then how bad how severe the your late payments are on that particular account. So
Got it.
yeah, but the other thing too is that again, you have to look at the overall. You have to look at your overall credit profile as well. Because sometimes, in a lot of cases, I'm working on somebody's account. I'm getting things taken off, but they may be seeing a drop in their credit score when I'm removing stuff off their credit report. But what's happening? I'm working on their credit report, but then they're running out applying for stuff. So now you got you got hard inquiries that's hurting your credit, or they're running up credit balances. Now you got those high balances, and even though you're having stuff removed from your credit, then it's still you still have the negative stuff the negative activity that's going on, that's not that's dragging your credit score back down, even though you're removing some collections and things off the credit report. So yeah, so you have to you got to be cautious. If you're working on your credit, you really want to limit the activity on your credit report. Otherwise, your credit score can be all over the place if you're still having those high balances and you're still applying for stuff, or if you're missing payments while you're working on your credit.
Absolutely, absolutely. I mean, as we were talking about earlier, where it's incumbent upon the person that you're working for them to play their part and not affect the things that you're correcting in a sense.
Right. Exactly. Exactly. Exactly.
Yeah, yeah.
Not working against you while you're working on that and trying to get things working. So,
Got it, got it. So you talked about high balances. Like, what is that a reference to? High balances is a reference to what?
so when I talk about high balances, we talk basically specifically revolving accounts. So,
Mhm.
high credit card balances, high retail store card balances, high, what do you call, revolving line of credit balances.
Mhm. Mhm.
Rule of thumb is that a lot of here, anytime you go above 30% of your credit limit, is going to have a negative impact to your credit score.
Mhm.
That being true. However, if you're trying to maximize on your credit score, you really want to get those balances below 10%, right?
Got it.
When you
Mhm.
when you get those balances below 10%, then typically you're going to see your credit score starting to grow exponentially faster, because the lower the balances are, the more of the bigger impact it's going to have on your credit score. Uh, anytime you go above 30%, you're negatively impacting your credit. Get it below 30%, then you're no longer hurting your credit. When you get it below 10%, it's like putting it on steroids. Now you're helping your credit score when you have it, when you get those credit accounts, and that's across the board. If you can have you can have 6 credit accounts, 5 of them below that 30%, but then just one of those accounts being above the 30%, and that's going to have a negative impact to your credit score. So until you get all of those credit balances below that 30%, then that's when you'll start getting some of your points back. And then if you can get everything below that 10%, then that's when you're really going to see your credit score starting to grow exponentially faster and get it on an upward trajectory to your credit scores.
Great stuff. Great stuff.
Mm.
And, and I hear you how you explain this, and it's so many people that miss the mark. I mean, that's why I'm asking, of course, elementary questions, um,
All right.
and some people miss the mark because I think there's not enough detail given.
Mm.
Oftentimes, we'll look at, oh, well, I can do this myself, and
Right.
if they're not in it, like like yourself, that is actually doing this on a day-to-day basis, and you're constantly educating yourself about these processes. I
Right.
think these are the small intricate details that people may miss in understanding how their score is affected, right?
Right. Right.
uh,
Right. So, but this information, this stuff that's not taught in school. You can't go, get a degree
Absolutely.
on it. You can't think back to credit class 101,
Right.
right? So, and that's the one thing about it. This you really have to, either to do your own research to find this stuff out, or either know someone who's really done the research to understand how this stuff works. And a lot of it, there's no one-stop shopping place to go for this stuff. You got to really, go and understand, listen to different people, understand the laws and the regulations, and really have to educate yourself on this stuff. And that's across all demographics, right? I mean, whether you're
Absolutely.
white, black, brown, whatever, this information is not really just out there, to everybody's access. So, and that's the thing. I mean, I have a really, really diverse mix of clientele, and that's because this, with this information is just not offered to the general public. I mean, you're either fortunate enough to know someone like us that has done the research and understand this, or you've done it yourself to really kind of get a grasp on how all this stuff works. I mean, the information is out there, but you have to know where to go to get it, and you really have to take the time to really kind of learn this stuff and piece it all together.
Mhm, mhm.
So,
I akin it to, the person that says, well, I changed my own oil in my car,
there
right?
you go.
But they don't know the difference between 10W30 and 5W30, right?
Right.
It's,
Exactly.
it's more than just taking some oil out and putting it in. You got to put the right
Right.
kind in. and
Exactly. Right.
and depending on how many miles you got on the car, there's different. It may change. So, but yeah, I mean, that's
Right.
what how I look at these things. Where there's so many people that have the idea that they can do something like this themselves, which is okay. If you spend the time
Right.
and educate yourself, then it's okay to go and make the effort to do it on your own. However,
Right.
we haven't talked about data suppression. We haven't even gotten into that part, right? where
Right.
where a lot
Absolutely.
of people, I'm sure, are not even. I mean, they're clueless to what that actually means. Um,
Oh yeah.
so, I
Yeah.
mean,
That's
I
just credit. It's just credit, man. That's just the tip of the iceberg when it comes to
absolutely,
you know
absolutely.
consumer reporting and the information out there, the information that is used to make financial decisions on your behalf.
Yeah.
There's a lot of different consumer reporting agencies that have you know that have our information that's being used to make those decisions, but the credit bureaus are the ones that are legally you know um, kind of bound to disclose a lot of the information. So yeah, but that's for another show. Maybe you can bring me back and we can get into some of
Absolutely, absolutely.
some of
Well,
that
we
other
have
stuff.
one such person, and we're coming up on our time, but I do want to give you an opportunity. A person asked, they said, "Great video." I don't know who this person is. That's why y'all got to click on the link so we can see your name. It says, "Great video. Where can we contact Mr. Sanders?" You want to share with the folks how they can reach out to you?
Sure, yeah, absolutely. So you can go to my website, which is creditrepairoflorida.com. So creditrepairflorida.com is that's my company is Credit Repair Florida. You can give me a call at 407-734 FICO or 407-734-3426. You see what I did there?
Oh yeah, I like that. Good
So
stuff. Good stuff.
yeah, yeah. Or you can email me at tim@creditrepairoflorida.com.
Got it. Got it.
Mhm.
Tim, great stuff, man. Listen, thank you for joining me today. Is there anything I know there's so many things that we didn't get a chance to talk about today? Oh, that's Rico Sanders. Thanks. Hey Rico, thank you for
Hey,
joining us. There's so many things that I know we didn't get a chance to get into today. And we will
okay,
certainly have you come back on because I really want to, kind of peel back the layers of things that people may miss as it relates to this.
for
Um,
sure.
is there anything that you want to share with the folks before we jump off today?
Um, yeah, I mean, I just, I would say, just, be cautious. There's a lot of folks out there, that claim to be credit repair. So a lot of credit repair companies out there that don't really have credit repair experts that
Mm,
understand the laws and regulations, and that's going to work on your behalf. And kind of reach the goals that you want. Because I have a lot of clients that work with me that are very savvy when it comes to their credit, and they can't be fooled when it comes to this stuff. So
Right, right,
um, yeah, so definitely be careful who you're dealing with. Make sure that they're on the up and up. Anytime someone is asking for payments up front, lump sum payments up front, that's usually a telltale sign that they may not be on the up and up. You know what I mean? Because the credit, we as a credit repair company, we operate under the guidelines of the CRO, which is the Credit Repair Organizational Act. And one of the things is that you're not supposed to take upfront fees. You're not supposed to start collecting fees until you're actually performing the service. So I don't want to see anybody get scammed out there and keep giving the legitimate credit repair companies a bad name. There are some really good companies out there, but just just do your due diligence, and check out the Google reviews and things of that nature. And when you're selecting a credit professional, and I do free consultations, so it doesn't cost anything to talk about what your concerns and your questions are, and to kind of get a consultation. So we always offer that. But other than that, the information is out there. You just have to do your research and do your homework.
great stuff, great stuff. So I got one last question. And
Yes, sir.
I know we're just a few minutes, just a couple minutes over. What is you gave one telltale sign of what they should be paying attention to when they're hiring someone. Could you give us
Okay.
just one other thing that we, as a person, if I'm a consumer and I want to I'm ready to get my credit fixed,
Right.
what type of research, if you're in a quick 30 seconds, what type of research should I look for if I've chosen a company, or what type of research should I look for in choosing a company?
Well, I would say,
Say
have a,
Google Timothy Sanders, credit repair in Florida, and they're done.
uh, yeah, I would love to say that, but then that would be too obvious of a shameless plug.
Right.
But yeah, I mean, I would say call and have a set of questions,
Okay.
and ask some of the hard questions, and if they are unable to answer them, to your satisfaction, then technical questions, because a lot of times you may just get somebody in a call center that that's read from a script. So
Mm,
have those technical questions, and hey, how much does a late payment impact my credit score, or what do I do when a creditor calls, or something like that. Just have maybe a set of 4 or 5 questions to ask, and kind of base that on the responses. Then you'll know if you're dealing with somebody who understands what they're doing. So
absolutely.
yeah, definitely do your homework, ask a few technical questions, and if you're not satisfied with the answer, and then of course you want to look at you want to look at the reviews. So if they don't have any reviews, then it might be a company that maybe not established enough for you to want to entrust your money and things in. Or if you see a lot of negative comments, negative reviews, you may want to you might want to be cautious. Or if there's no Google presence, then you might want to you may want to keep looking at that point.
Great stuff. Great stuff.
Mhm.
All right. Again, Mr. Sanders, thank you so much, sir. We will be bringing you back, because I'm getting seeing in the comments that people want more information.
Sure.
It may be a situation, if you're open to it, where we do a private group and have some people come on, and they may invest in the consultation. Of course, we do free consultations,
I
but
like investments.
yeah, absolutely. So we'll just maybe do a private group, have people investing coming in just to get all the questions answered, and
For sure.
potentially, having you take them on as clients. So again, thank you so much, sir. I am grateful for you. Going through all the
Awesome.
technical things that we had to go through to get you here. But you're a great
Yes.
sport about it, and I certainly appreciate you being on with us today.
No, man, awesome job moderating too, man. Good questions, and good flow. I think that's good chemistry. I think we make a good team. Might as well keep it going.
Absolutely, absolutely, absolutely.
Yeah,
Thank you very
awesome.
much, sir. And again, I didn't mention we are actually. Did I mention? I may not have mentioned. I'm actually hosting a virtual workshop tomorrow evening at
Okay.
7 p.m. where we're going to be talking about credit, cash, and closing. So we're going to talk about some credit things. We're going to talk about how to leverage your credit to get cash, and we're also going to talk about getting to the closing table for those people that are interested in real estate investing. So again, thank you for joining us, sir. And this has been the Real Life Real Estate Investing Show, where we talk about real life real estate situations, but we bring you real life real estate solutions. And thank you for joining us, and we'll see you next week.